Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Sticking with the economic vibes, I think it's very interesting to compare the UK and the US, two vastly different economies in terms of size and in terms of strength. But let's take a look at what's happening to the housing market there. And I should say there are two very different sets of factors at play in the housing market too, when it comes to the UK and the US. In the UK, there tend to be shorter term mortgages, therefore much more pass-through of an increase in the base rate that's likely to be felt in real time by the owners, by homeowners, and therefore there is more sensitivity to rates. In the US, the practice of locking in mortgages for longer, in many cases at lower rates prior to the recent rate hike cycle, that has led to less sensitivity to mortgage rates by the general public. Of course, it does also lead to less houses changing hands, less volatility, less velocity in the house price change. What we can see here in terms of the UK, that the percentage of houses that have been sold at a loss has been rising, and we see that that is in terms of London and England and Wales. London has over 20% of houses there have been, or even close to 25%, have been selling at a loss by sale year. That's less of a factor on a national scale, but still quite significant that there would have been less price appreciation, and this is even in after adjusting for inflation, they will have been still selling at a loss. So very disappointing in terms of the house price projections there in the UK and also the house price experience. We can also look at the US with 2 points to note there. One is that the house price is rising at a slower pace, which has hit household wealth. That's the chart on the right. The other note is that home ownership has generally been out of reach as affordability is reaching record lows. We can see here that mortgage rates and prices have been continuing to bite, and that has led to generally to a sense of the less volatility in the home market, less velocity in the home market, and generally affordability being low. This will affect morale and definitely will continue to press on that affordability number.